Hello, 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 everyone. Good Monday morning. Happy Monday. Yay, another week. So, how is everyone doing? Hope everyone's rested and ready to tackle another morning. Hey, waka waka. Hello, Amit. Hello again, Amit. Good morning, Davey. Good morning, Rams of Fall. Good morning, Patrick. Weak market sell-off during Asian just picked up. I think this is at resistance on Nasdaq. So I had too much coffee already. Tesla is super weak. I guess AI day just didn't impress. Although you have some Wall Street people raising the targets because of the amazing AI day overshadows the weak delivery numbers. So that's where we sit. Again, is it tradable? No. Meaning you don't just buy something because an analyst upgraded. You have to have a trade. Just like a prediction's not worth two craps. It's worth what you can if there's a trade. Remember, is there a trade? Predictions don't matter. Gary, good morning. Nasdaq looking to set to Waka thinks the Nasdaq's looking to push down, but is there a trade? Morning, Jake. Good morning, Christoph. Good morning. Good. Glad to see your face is not red. Was it red? Would have been a little fired up, but it wasn't red. I can't believe you used too much in coffee. Well, I've already had a huge cup of coffee, and now I'm 4 espresso shots into it. So a huge cup and 4 espressos. Well, there you go, Christoph. Swung Tesla puts. Yep. Let me just get through. We got good morning, Sterling. Good morning, Options 22. Good morning, Ted. All right. The regulars in the house. By the way, if you want to become a regular, please do consider subscribing, ringing that bell, and hitting the like button. Enough said with that. Let's just get straight to the markets. Gary shorting the US dollar, Japanese yen. You counting on some intervention there or something? Connor, good morning. I mean, we had a little minor bullish reversal signal. This will get interesting. Again, it's going into a Monday. We broke to some new lows last night and then got the little weak reversal signal so much. But overall, than that, there's just some minor. There's not a major trade setting up just yet. We got Bostic speaking. We got, remember, 15 minutes after the open, we have the manufacturing PMI. Watch for contraction versus expansion. Even if it's a miss, bigger thing would be a contraction. 9, more important, the ISM manufacturing PMI. Remember, ISM large firms, S&P global manufacturing smaller to medium firms. Again, watch for this, but any strength in that number still supports the Fed hiking narrative. Although we've seen so much stuff about pivot. Yes, at some point the Fed will pivot. They will pause. They will pivot. People have been talking about that for like literally 3-4 months at this point. At some point they'll be right. It's just like at some point the market will have another rip your face off rally, and Tom will say, "See, I told you so." At some point, the market will go down, and Waka Waka will say, "See, I told you so." Is there a trade? That's what's more important, because you know what? I could say, you know what, we're gonna do this every day. It doesn't matter. Is there a trade? What I think even doesn't matter. Is there a trade? Now, what I can analyze in the markets for potential setups, I think does matter. Oh, look at the... Oh boy. And speak of the devil. Huge gap up. Huge gap up. This isn't a huge gap. By the way, we gapped down in the futures last night and filled it, then went to new lows. This is where it's just absurd with talking to people anymore. I might as well just do my market analysis and shut up. So I'm going to be keeping an eye on both these. The contraction, if we do have contraction on the manufacturing, if we do have contraction, especially below 50, watch for more pausing. I mean, everybody. So you have a bunch of people. Something's going to break. Something's going to break. Yes, could something break? Could Credit Suisse go belly up? Could, yes, at some point you could have these things. Is it tradable? Well, again, that's what you should be asking yourself other than predictions. Because, I mean, you could go broke trading what you think's going to happen versus is there a trade? Some people have been beating the bullish drum, buying dips all the way down. And if they were actually doing that, they'd be destroying their trading account, if not destroyed it already. Then we got more Fed speak. Come on, mouse. Don't fail me now. You see, besides Tesla, you got green across the board. You have oil up based off the chatter about the OPEC cuts. OPEC's already running behind in production, period, so they can announce more cuts. They're already running behind. Is there a great trade set up in long oil yet? No. And I'll show you why. It was a little bullish breakout trade, but it's not a fantastic trade. FOMC still 57% for the 75 basis point. And for all the people that say pause even in November because something's going to break, well, pause isn't even on the radar screen yet. So, but ignore the green number. We're still the key area. We're still trading pretty deep in negative gamma, and the flip number isn't till 4,000. So even on a more substantial rally, should we start getting into that, it's still negative gamma feeds it on the way up. All right, there were no earnings this morning or after the close, and this is the unwinding of last quarter's earnings season. Really, earnings start in next week. We really start third quarter earnings. So, and this is also why I hate those questions. Are we going to be down or up? Well, we went down. And now we're bouncing off the lows. Here's what I was talking about. The little, by the way, this potential double off the table. It went down too much. We caught just below this 35, 78, 50. When it hits a lower, do you just magically buy this? No, not by my grounds. You watch for a reversal. We got the sharp reversal close to that area. Horizontal channel. Now you got the breakout into the clear path move. That was a trade earlier. All right. We're now back above another little area. Do we have some more clear path move to unwind? Yes, on the 4 hour. I'd be paying more attention to, I'm going to bump this down just a little, to more on a continued rally about 36.50 with the top of the rotation zone. Then above there, 36.77. We are coming into some key resistance area. This is also entering some choppy trade, but we're coming out. We don't have cycles rolling over yet. Remember, there is, if we get that rip your face off rally forming, aggressive buy above Friday's high, divergence patterns. But unless you're already in a breakout play, there's not much unless you're going to play something short-term into the open. And remember, right above here, if you want to do your shorter term harmonics, depending on your time frames, remember, don't mix up time frames. I will be really focused today on a continued rally, 36.61 to 36.84. Why? That's in the key rotation zone off the little sell-off. That would also get to closer to a reconnection with the daily rotation zone. I'll close above the 62.5, then I'd start targeting the most recent high area from last week. Then you remember you ratchet up your harmonic. So depending on your time frame, now for the longer term bearish time frame, what are you doing? If you're a long-term bear, which the longer term, medium to long-term signals are still in bear mode, you're lowering stops on your long-term bearish positions, and you can also be trading around a core position, which means you can take slightly bullish trades to offset or partially offset your bearish position, waiting for the next big rollover play. This is why time frames matter so much, because somebody could be trading a 6-month time frame that's very different from a 1 hour or a 5-minute time frame. Push down today, 36.55. You can now also put on some lower term harmonics. Again, Waka's expecting a rollover. I would not get more bearish until you break down personally below about 36.08, 36.10. This would be the harmonics I'd be utilizing for short term, which would give me a cluster area 35.48.50 to 35.55, which on a rollover play would be a great first target. Then 35.27 would be my next key area. Already went into, we're trading into a clear path move, but is this, you have to be nimble. Why? Because there's lots of stopping points. Even though it's a clear path, you have lots of stopping points. You even look at the 1 hour. Yeah, there's a little micro clear path, but the breakdown zones is getting closed in on. This is why, is this a fantastic area to trade into from the long side? No, it's not. It could be choppier. By the way, if you do start breaking down, keep in mind it has formed a clear path move in the short term going up, and the first target area would be about this 36.08. So there is a little shorter term potential bearish area to trade into. If you don't trade the S&P, does everything I said just matter? Yes, because you can do the same kind of analysis on exactly what you do trade, which is the point of me going over it. No, it's not an emergency FOMC. I talked about this yesterday. It's a regularly scheduled FOMC meeting. This is the fucking FinTwit things, and I'm sorry about swearing. I'm just so tired of this crap. It's a regular meeting. Could something happen from a regular meeting? Yes, it's not an emergency meeting. That was a rumor put out by the same friggin' idiots. Something's gonna break and they're gonna pivot. Could something eventually break and they pivot? Yes. Is it tradable? No. And this is just trying to get a counter rally going. Forget all this. You know, it's the same thing you've heard. Remember, we had all those little tried to counter rallies. Oh, there's going to be a ceasefire in Ukraine with Russia. Russia's going to like blah, 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 blah. Where'd all that beating go? Now it's like Russia's going to drop a nuke. You know, all these rumors, which is you got to buy the market. You got to buy the market because it's a friggin' rumor. They're going to pivot. They're going to pause. That's not even a fucking trade. So fucking sick of this shit at this point. I guess red face is back. By the way, continued my major rally area I'm watching for at least the pause is this 36.77. Stop listening to all that crap out there. If you want to listen to it, it's entertainment. It's like financial stuff is entertainment. Even our SEC's entertainment. Let's charge the Kardashians with crypto pumping or whatever. Oh, and let's let one of the biggest friggin' stock fraudsters walk around pumping everything and selling into it. But I think, you know, a lot of these celebrities should be charged in pump and dump schemes. However, you're ignoring the most blatant crap out there, you friggin' SEC. All right. Nasdaq coming down. Do you just magically buy the harmonic? No. Again, depending on your time frame. Now I'm going to just lower these. I'm actually going to lower these just for the sake of getting this little reversal bar. And now if we do roll over 10,800, then major cluster 10,007 to about 10,725. We've re-entered the breakdown zone. Here's your 4-hour clear path. You still have some potential room. You are trading against stuff. You have higher breakdown zones. That's why this is, you have to be, from my standpoint, you have to be more aggressive coming into this because you have multiple stopping points. So you have to, if you're trying to trade this alongside, you have to be more aggressive, either taking off profits at your key areas or raising your stops. It's not just one or the other. It can be both. Especially pay attention to that 4-hour rotation zone. So far, corrective rally coming out of some oversold with 4-hour cycles turning up. Your major area you can watch, and on the daily, it's about 11,300 coming in with the declining rotation zone. Also, remember the June lows. I'd really be watching this key close for minor resistance. You start getting above there, then you can start getting a slightly more bullish to the daily rotation zone. But you're still a counter trend rally back into resistance, and there's a lot of resistance points in here. That's why it's not a fantastic trade just yet. There will be bullish trade setups. This is just an aggressive bounce so far. So that's your key levels, and then I'm trying to do some teaching so people don't have to ask me stupid questions. Where's my major thing I'm watching on a continued rally? Would be between the 50 and the 62.5. So I'm using the most recent harmonics, 11,252 to 11,342 is my major area. You start getting a close above 11,342 on a minimum 1 hour basis. 4 hour is much stronger probability sense. Then I start targeting this clear path area, and this is for shorter term stuff, because then we should retest this high area from last week. No, not new all-time highs. The high area from last week. Dow, we're still, and this is counter trend short-term rallies getting out of oversold with divergences. Coming off the cluster here, little breakout trade, clear path move. Don't have to restate everything. Do your harmonics. I'll leave this more up to people who really want to learn this stuff. To do your own levels, you should know what to spot now. By the way, I'm taking those short levels I'm using right here, which now gives me a cluster 28,475 on another rollover play, 28,323. Russell, already again, I'm interested at this. I'm paying very close to the Russell at 1,700 on a 4-hour closing basis. That's key. The breakdown zone's back about 1667. DAX, no double. This is easy to see the triple at this point. Extended rollover move. So that's off the table. The only bullish thing, remember, there's still a gap fill. I would use the opening of this 4-hour bar as a first target to at least raise stops, though, and then the full gap fill would be to the closing price, 12,308. You have pretty decent buying support in the short term down here, and if you're doing this, would I be using the reverse harmonics from here? No, the forward harmonics would be from here, from this pausing area. Just stuff I've studied for a long time. Again, even before this happened, you already earlier today made the triple top. So the double, which never triggered or confirmed, is off the table. We still have the next key major push up area to about 113.16 to 113.17. We're getting the correction into the rotation zone. And remember, the key breakdown area is all the way back at 114.11. So this is so far a counter trend trade, not a long-term bottoming position. This is a short-term bottom. The next rollover will help us determine if it's a longer-term bottom just yet, coming out with weekly cycles. Also remember, this key breakdown zone reconnects you potentially with the weekly rotation zone to reset that, which after 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks down would be a nice reset because it's very overdone, and I will watch at some point for the next rollover play to gauge it. Dollar index still pausing. Yes, If this pulls back more, it's a triple bottom, and then I'll be watching again for the continuation pullback trade. Until that happens, you do have a potential bottom at 112.70, which has not confirmed yet. VIX, plus some of this stuff. This is the key area for support is 30 bucks. You start breaking below 30 bucks. 29 is the next target. You start breaking below 30 bucks. We're right at, this is slightly delayed because I can't get the real-time data just yet on this platform. If somebody wants to punch it in there, right now the 15-minute delay is 31.30. I'm watching though for, unless this really starts getting a move above 33, can't overly play the super bearish case. And can't get overly bullish until we're breaking below 31. Right now, it's in no man's land. Crude. Again, why is it not? It's a little minor breakout play. Closing in on the next levels, but there's lots of stopping points in here. There's no great clear path move. That's why it's more of a difficult rumor-based play to the upside. There will be a better potential trade setting up once we have a signal. Also, we're bouncing off here now. We get a weekly close above this week's high. We could easily see a run back into the low to mid 90s. Also, a corrective play off that first target being hit from the bearish play. We'll take a look more of that later, but the short-term play is still to the upside. Euro. Yes, this is a potential double top. 97.30, 460 on at least a 1 hour, preferably a 4 hour close would trigger it. A pushback above about this 98.20 area is going to start invalidating it. Pound, not going to move forward with the tax cuts, so you're getting the continued pound rally. Yes, even a push up does not invalidate a little double yet. So that's the only thing I'm watching to the bearish side. You are getting back to the key thing. There is some major overhead resistance on a little continued rally about 114.80. Tesla, we were back down below the harmonic. I am watching, besides the rush in with the gap play for all the perma Tesla bulls, with the market stays stable. The key area I'm watching is this 265 minor will be 260. Remember, use your gap harmonics on this with the opening print and do it from Friday's close. All right, on the rollover play, a retarget of a 253. That would also start watching the next major key areas. Is 247. We get the daily close back below 247. Going to target the recent lows. Don't be surprised with some short-term pressure if the Nasdaq and the S&P hold up, that you could get the short-term gap fill, at least a retest. Also, we closed below key support, so retest the key breakdown zone. Sorry, I did not get to comments. Good morning. For the spiders and the Qs, again, it will be any gap fill. On the rollover would be the gap fill to Friday's close on the lows. Key resistance, 233.50 area. 263. That will be the key major target. I would be watching the S&P because you are going into some pretty major resistance between this 261 to 263, 50, 60 area with the declining rotation zone. So that's the only short-term bullish. Based off the pausing area that's going to be formed on this gap up, yes, you can now use, because we already hit the reverse harmonics, you can now use, remember your forward harmonics, don't even bother with that. Use this key, even though it's not as super strong. If we do break below, because the first thing would be targeting on a rollover play, Friday's close, then you'd be looking at 255.29, 253.40 until we get a stronger pausing area. For your Qs, For your Qs, 267.20, again with the gap up. First on the rollover play would be to Friday's lows, or to close really, 267.20, 265.33, 263.57. Your overhead area, we're trading 269.06 right now. 269.80 is your major breakdown area. And you have multiple stopping areas in here, just like the Nasdaq and the S&P. So if you're trying to trade this from a long bounce side, your next area we're opening up right now, 271.50 would be your next major area. Let's peek in with the S&P. So even on a trade back into really, even on a pullback trade this morning, again, can't get overly bearish with the rising rotation zone and back into some key support. Good morning, George. Yeah, it's all over. It was a scheduled board meeting. I don't have anything else to say. All right. When gap fills, does pre-market count? No. It's official gap fill is during market hours, because pre-market, and this is for stocks, well, futures, it can be due at any time as long as they're open. Let's see, I'm trying to catch up. If there's anything else. No, I'm just trying to get through stuff. I'm not seeing much else. I did Tesla, so we're set with that. We can peek in that with the open. Now I can show you the gap fill. So we don't have at least a short-term bottoming bar just yet. So you're going to ratchet down. If you're trying to play this to bullish side, as it goes lower, you're going to ratchet this down. You remember your key area is 247.29. I'm showing you gap harmonics with this now. So as long as this pushes down into the open, you're going to lower your gap harmonics. The key thing, I got some extra time this morning. Your key thing will be, see how I'm ratcheting it down? Your key area to watch for another rollover play is between the 50 and the 62. What signals your probability shifting in your favor for the gap is at least a close above the 62.5. And watch, see, as it goes lower, I have to keep ratcheting it down. What a lot of people will key off of, once we get a pausing area, we jump back to the S&P real quick. Little pullback into the open. Your key area on the Nasdaq, I'd be keying off of into the open. If it can even get back that far, it's about 11,035. Little more room on the S&P to the downside, but minor would be 36.24. Back to Tesla. Fair amount of selling, so see, there's no gap play to the upside. Key area, again, we've already identified 247.29. And that is an area I will be watching for the potential bounce play. Now, your other harmonic that's broken, this 253.71, is an area. This is where you leave them on the chart from prior harmonics. I will watch for key resistance. And there's our 247.29 area. Does that mean you just buy that area? No. You don't even have a 5-minute bar and you have no buy signal just yet. Because we're just pausing in this area. Now, this is why you use your gap harmonics. Now, if we hold this area, if there is a bullish bounce trade, again, nothing I'm doing is advocating trading here because we're doing different time frames. 253.80 would be a key target area for a first little bounce trade should there be one that sets up. There is not one yet. And now you see if we do put in a low here before I have to jump, we now have our new harmonic areas. So the key area would still be between the 50 and the 62.5, but we've got it more established. 256.15 to 258.50. You can do this on, this is not Tesla specific. This is, you're wondering about the gap harmonics. That's how you set it up. So there we go. Hey, Sashi, thanks for the super sticker. Martinez, can we do that after the close, please? So now you're getting, I'm just going to go into a couple more things. I got a couple minutes going into the open today. If you do what a lot of people will be watching, if this is a pausing bar, they will be keying off of, and I'd be using if it does not break to new lows. If you're trying to do something in the very short term, lots of people will be focusing on this bar's potential 5-minute high, which is not in yet. If that bar stays, I'd be watching above this 249.10 area with a pausing bar, and that would be an aggressive try to front run something. If you are overly bullish, that is a short-term potential 5-minute play. Again, not advocating a trade here, showing you how this potentially unfolds. And again, you have the cluster right there. So that's how you keep up your analysis. And I'm not going to bother with the 1 hour. Now, I like to watch in with the overall. So let's check in with our 15-minute rotation zone, pulling back into the open, but you're still not below key resistance. So what I will watch for as this unfolds, because is this a spectacular short play? No. This is a pullback into the open. You have all this overhead resistance, especially European resistance. All right. So this is a pullback area. If we start breaking down below this key prior support area and retest, that would be the better, from my perspective, the better rollover play. Other than back in here, I will be watching for a bounce play. I got to pull this up. I have it on my overall also. If you watch the tick, I'm just teaching a couple other things here. There's been not a super bearish tick print yet with the stocks. You don't even have a really strong tick print yet with a lot of selling pressure in the stocks. That's why can't get overly bearish yet. So far, this is just a ordinary pullback trade. This is where I will use additional information to help clarify stuff. So far, we have an ordinary pullback trade into the open. We don't have a lot of selling pressure in the stock market yet. There's not a lot of downward tick pressure just yet. The cumulative tick index is really important to watch as a filter. There's some little extra information for you. So if you're keeping an eye on the tick, what you're going to be watching for is with selling pressure, start watching for key spikes. If you get a key spike down here, it's some major selling pressure. But if you start getting regular tick prints back below about 450, 500, and it's just pressure, 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 pay attention. Spike down below 1,000 is potentially short-term little bounce plays. But as you see, we're not getting a ton of major stocks across the board selling pressure just yet. And we're not even back to some key major support yet. All right. Hey, Rich. Hey, PMG. Well, let's begin again at Tesla. Tesla did get hammered. So now what are you going to do? Is there still a major reversal play? No. You're going to lower your harmonics again. Let's take a look at the next key levels. Again, on a closing basis today, you're watching the 62.5 harmonic. Start getting the close. The next major target is 234 and 220 to the downside. Also, right now, pay attention to this for anybody trying to trade this to the bullish side. This key, what was support, you're now trading below. So this is intraday resistance along with the prior harmonic. So we start getting at least the short-term bottom put in the S&P and Nasdaq. You have your key, and look at where the 50% is now from the gap harmonics. Your 50% with your prior harmonics, and right below that you have that one of that major support or resistance areas. Remember, resistance is an area because you can draw it. That's from a key open, gap open. You have two spike highs, so this is your resistance area. I'm showing you how to analyze. So look at this. Here's your resistance area. Here's your gap harmonic. So on any bullish play, what would be if you were trying to get in this from the bullish side and you have a bullish signal? This would be a major target area for an intraday play. Would not play for the gap fill until I got, at this point, as long as these lows hold, until I got a close above 256.72. If these lows do not hold, then these levels would ratchet down again. And you can apply this to whatever you're trading or looking to trade. That's how we're setting up price action. We're using harmonics. And you're using gap information. Now we're getting the little reversal, and you see how we never got a key. Look at this tick so far. You've never gotten a strong tick move down. You've never gotten this yet. I'm not saying we won't. So from the bearish case, now I'm going to be watching. I'm going to jump off in a minute. Now we're getting a rally back. If we've established a down move so far here. You can use your most recent harmonic. So I'm watching now from a bearish play. We have a counter trend rally, and we're going to assess. And on the counter trend rally, again, this is for the short term. This is easier to teach because you get some sort of short. So what am I watching? This between the 50, 62.5. Shorter term, you start getting close above here. I'll watch for a retest of this high area. We now have a key point to watch for, which is the established lows. So we start, either we make a topping pattern that triggers, and if it triggers with them, we get a negative tick. That could be potentially an intraday bearish play on the short term. Other than that, this is the key area I'm watching for the rollover play. So this would be a rollover play from the aggressive, especially since we do not have negative ticks yet. I will continue to check in on that because we don't have a lot of selling, broad stock selling pressure yet. So this is the area I'm watching for the selling pressure to kick in. Now we start getting key confirming selling pressure. Then we now have a line in the sand which is drawn. Now we're in between the 50 and the 62.5. Now we're doing the counter trend rally. So everybody trying to shorten, remember it's on a closing basis, not just a spike up basis. That's why I like to watch for intraday plays, confirming information with the stocks, because it can get you avoided from a potential whipsaw. And so far, we could be setting up for a choppier day. Do not buy anything now. I'm revising the whole thing. So I'm trying to just teach something going into the open right now. All right. See, you have a key line in the sand. You can also do your analysis. And look at this. On a closing basis, here's where I like to set alerts. And right now I have to use this platform. I normally do this on the trading platform, but I'm going to be watching for my tick to start breaking down. Look at this key support area. So far been 0. There's been not a lot of selling pressure. We start breaking below this and sustain below that, then some selling pressure is coming in. Other than that, we don't have sustained selling pressure just yet. I hope that helps people for understanding shorter term stuff. The PMI number came in at 52. Above forecast, higher than previous. And this is your more minor number, but this does not, again, there's no, from a manufacturing PMI on the small to mid firms, this doesn't warrant a huge contraction just yet. So this doesn't support any pause from the Fed or even yet slower rate hikes. The next important one is your ISM. You're going to look at the same kind of stuff. Do not ignore your prices paid. This is where you're jumping around. If you're short-term trading, you're jumping around a lot. Now, this is in the area for a potential double. See how trades unfold? Now, I would be using, I don't know if this is the high yet, because the other targets extend. You see below this is the move that started it. This is into the wick. So I'd be using the conservative targets. Don't know if this high's in. So we start breaking down with negative, start getting negative tick. We've already retested a key support area. That was resistance becoming support. There's the potential. There's a potential short trade. It could be wiped out by more bullish price action. This is the way I like to wait for the trades to set up. Then you, again, look at your multi-time frames. Did we close below the 15-minute rotation zone yet? No. Would this take us below the 15-minute rotation zone and potentially trigger a reversal trade? And look where it triggers it into. Key support area. Also, if you're now, again, let's peek back at the tick. Wonder how many people stuck around for this. I don't know if this is useful. Again, no breakdown in my tick yet. Doesn't mean it won't happen. We have potential topping area. This is also, if you're trying to do this, and you can trade the spiders and the Qs the same way. I still like to do the analysis on the S&P and utilize this. So now on any bullish play, which I'd start getting really watching this opening high area, my next major target would be about 36.52, 36.55. Why? We have a key higher time frame area I already highlighted. See this key higher time frame area from the 4-hour, and I have it reinforced by a harmonic. You also see this key area for this still potentially valid double top would take me back below the 1-hour rotation zone. And if you're looking here, this is where it's handy to look for your time frames. So this could be a really good potential short should it trigger up. Why? Then that's breaking below this key support, which is also defined from your lows back on the 28th. Normally, I'd have multiple charts up so I don't have to keep flipping time frames, but it gets too crowded and small to live stream. So that's how you're putting multi-time frame analysis together, and you don't need to catch every move. You try to set up for the highest probability moves. Too many people try to catch every move. That's not your goal as a trader. Your goal is to put the probabilities in your favor. Does that mean that there's a guarantee? No. That's why you always trade with stops. You see, still no extended selling pressure. Yet. Could come in. All right, now you have, if things hold up, we have a key defined low, a pretty key defined high at a harmonic. So an aggressive, should the markets hold up and really start to break to the upside, there could be a potential very short-term break trade to the upside. Is that a long-term trade to the upside? No. If this pulls back and holds this low area, even if it slightly breaks to potentially new lows, you could have a potential double trade. Now you're going against the short-term trend, so you have to keep that in mind with raising stops aggressively and more aggressive profit taking. And your targets might not even work out. So just because you have a setup, you still have to gauge. It's what I was talking about yesterday. You still have to gauge your reward to risk, because every setup isn't even a potential trade. What it is a potential setup. If you can't get reward to risk on it, then there is no trade, even though it could be a setup. Because now you're trading against all this area, and remember, you have a lot of overhead resistance that's now established. So if you're trying to catch a bottom in here, you're trading into major overhead resistance, with your market still not sustaining an up move. And right now, it looks like we could be potentially going into a choppier back and forth day, the way everything's setting up right now. Now I'm going to peek in at my other markets. What would I be looking for on a shorter term? I will be watching for a potential topping play in here, especially if notes start breaking, make a little move and then break down. We have a clear path move. Then we could get some backfill in the notes. Overall, tried to break to the upside so far and could not sustain a move. So we're in a consolidation pattern. Now there's, again, you're going to keep an eye on this. This is why it's handy to jump around in time frames. We start getting a topping pattern in here, though, a trade back into a clear path move, especially with a 15-minute rotation zone out of the day. You know I like to watch that date for the day. You have a potential reversal trading pattern. Potential. I'm also going to look at my dollar index. Is there anything major going on in the dollar index? No. Intraday, I would be setting alerts at these key intraday levels. But so far, there's nothing. So that's lower on my radar screen. I don't have real-time VIX in here yet. But is there anything key? Well, now I have a pretty... Could somebody punch in the real-time VIX for me? Look, I have a key support area. Right in front of that 31. It's more like 31.15. So to get into overall bullish, like substantially bullish mode, I'd start to see a break below that. So far, 31.23. Thank you. So I'm still operating off delayed data because I can't get the real-time data on the CBOE. And is that CBOE info or CFD info? Because remember, I want to point something out to the people trying to use it on the one on the TVC is CFD. It's not 1-for-1. If you're using the TVC data, it's not 1-for-1. It's a CFD. You can use it as a proxy. I prefer the direct CBOE data. Which I can't get on here real time. I have it on my trading platform. But this establishes, this is how you can establish your key right now. 31.23 is roughly 31.15 was the area I'm talking about. So we start taking out those established day highs with some good push-ups in the tick. We could go into more of a bullish mode. I need this to start breaking down below. All right, tick cross it. Let's see. So we're getting some push downs, but we're still nowhere near. We're retesting that zero area, but look at this. This is why I like to set up alerts. We're still not flushing. Now we can jump back in. Where does our... Then I'm going to have to jump pretty soon. Are we near triggering a short trade, though, yet? No. So far, we're in choppy. If we come down and then rotate back up, this potential double is then turning into a triple, which is off the table. Then there might not be a short-term trade from the way I like to do something, setting up on the S&P and Nasdaq. It might just be, or... As I said, we start breaking below the key VIX areas and rallies back up, especially with the triple top, slightly favors a continuation pattern. There would be potentially a scalp trade to the long side. Flipping your harmonics, this is where you can, again, do your analysis. Where's the key area? What's the next warning sign I might be breaking down? 5-minute close below 36, 26, 25. At least on a close, not on a little spike. Before that, so that's a warning sign. That's how you can keep, and it's handy. And this is by no means I'm going to stress an advocacy to become a day trader or a futures trader or anything else. The same kind of analysis you can do on higher time frames. Higher time frames outweigh lower time frames. I'm just showing you how you can put together your multi-time frame analysis and utilize some of the tools I demonstrate. And it's easier because we're not going to sit here day after day after day. So normally I'd have my tick window on my trading plan open. So we still don't have a major breakdown in the tick. Still, we don't have any major selling pressure still. That's why I'm leading still towards a choppier day. Does this help people? Now we're starting to get, with no breakdown in the tick, we're probably going to start getting some push up to retest this high area. With that, I am going to jump. I tried to teach something now. How I look at stuff with the intraday. Thank you for all that. And you remember, if we don't get, this is looking so far like a choppier day, although it's leaning now towards choppy bullish. That's how you start it. Look, we're back up here. We're starting to get much more buying pressure than selling pressure. Spike ups in here are short-term top areas too. Short-term, I mean, you can get 1 5-minute tops on the pushing. But if you look, what does this day look like overall? This is buying pressure still in the upside. Buying pressure will evaporate. I'd be setting an alert now here. Because we start breaking down below here again, it's going to really focus on the choppy day then. So far, this is just a, we've gone, let me just double check something. That can still be the problem. Now is the conservative targets, the aggressive targets. This is dropping in probabilities on your short-term basis. So this is definitely going into a bullish to choppy day. And now there looks like I'd be watching for a pullback and then breakout potential plays versus the double. But we're not in a trend day so far. And why? Because now this is, there we go. So do you see, I hope you see, again, ticks leaning towards the bullish side. VIX update, please. $30.75, yeah, that's all right. So you see now we're getting the confirmation with the VIX. We've retested on the open. The bears couldn't take it. Now we're starting to definitely get some momentum. So now it's a momentum play to the upside. We're starting to get the momentum. You couldn't flush out the bearish. This is off the table. So the only thing now is on any pullback trades, it would be with a short-term bullish play. Your next key area, this is now support, 642. Remember, you're not into a maze. There's lots of stopping points, so you have to be aggressive on you have to be aggressive with moving stops, from my perspective, on any bullish trades. Because you have a lot of stopping points in here. But that's how you can analyze some intraday plays. Again, this was for intraday only, but you can put the same concepts together on larger time frames. So there we go. This is definitely looking, though, to err on the side of bullish to choppy so far. If you start getting push down plays, you start getting spikes down below about minus 800, it will revert to more of a pure choppy day if we start getting some selling pressure coming in. So do keep that in mind. And this is why I also still focus on your 15-minute rotation zone going forward. Also, your next key raising a stop area would be on the Nasdaq would be about 11,196, right in front of that 1200 area. On the S&P, if you did anything to the long side, see how I'm using from these lows that were established overnight. We have a decent pausing bar, pull back to rotation zone, 36.54, and then 36.64. Right now we're getting the pause at 36.54. Your key support's coming back at 36.42. Let me check the 9 a.m. numbers now. Normally I'd have alerts set up for that too. I can't set alerts on here. So ISM coming in, missing forecast, in contraction. Employment, this is a red flag. So definitely I'm going to be watching for, see, this actually is the bearish bullish. This is actually a contraction sign. Headline number still above 50. Employment is a contraction number. This is going to make non-farm payrolls more important on Friday. New orders also in contraction. Prices, slight drop, but still high. So this is the case now. This is a contraction with employment going into contraction. What does that mean? Does that mean it's bullish because people are now going to think the Fed's going to hike less? Don't know yet. So I still have to go off of the overall. I'm peeking in at the heat map. Why? Because you still have, and normally I'd be jumping around to look at some of these stocks to see what that bullish pressure is. I'd update just to see what the mindset is with the overall 56 still. And now I'm going to go check my notes, which are, all right, now the notes favoring, hey, the Fed's going to have to ease up a bit. We're now pulled back. We're now moving higher on the notes. So we pulled back. Now we're breaking out. Next key target area is this 113.15, 113.16. Next area to watch for the VIX is 29.50, by the way. You'll get some minor support at 30, but next major area is 29.50. So I'd have to say that this overall ISM number is bullish for the market because the mindset is that Fed's not going to be able to be as aggressive to the upside. Still, the target's 36.64. Next key one would be 36.77. With that, I am going to call it a day. Can you please tell me a few of these sites you use? Well, you can do, I was just jumping out of this. If you, by the way, the TradingView did put in a decent heat map now. Don't like it as much. Here's your heat map there's your heat map in TradingView, which is handy to look at because you can see which sectors have your buying pressure. Pretty much it's across the board besides Tesla from their numbers. The other sites I utilize, let me peek in at Tesla again. So this is a little counter trend rally. Your lows have held, so can't get overly bullish for a gap fill until back above 256. Everything would be a short-term play. The other key things I utilize, well, for earnings, eWhispers, which puts out for free a really good earnings calendar. Try to keep things free for people because you use for the FedWatch, you see, look up cmegroup.com and it's their CME FedWatch tool. I also use for this, I use the FinViz. I use this for stock scans and for heat map. This I use dailyfx.com. It shows nice big numbers. I look at a couple others for my own personal one, but this you can get all your free information off at dailyfx.com, real-time information. For free right now, it's still in beta mode. I use Tier 1 Alpha for some of the gamma stuff. Fear and greed, I use CNN Business for fear and greed. You even see this rising. So again, we could be getting that short-term bottom. There was no capitulation. Then I use for current market valuation for that. The other things I use for overall when we put out stock picks, my favorite way above FinViz, I utilize for my scans. I utilize Stock Rover. There's a link on the website to that too. That's fantastic for fundamental scans. Those are stuff I use. All right, with that, let me get back to so that's how we do it. Oh, that's how I do it. Again, no advocation of taking any trades here, showing you how you can assemble tools together to analyze the key data. Still, no breakdown. You see the spikes up here, those are generally the short-term topping signals running out of momentum. So I would be moving up stops, especially in this area. Russell is a strong breakout right now with everything else. This is also a great area. This is a great area to utilize if you're trying to play something short term on the Russell. This gave a nice reverse harmonic. So at least raising stops 1691.60. Next key target 1695. Support coming in at 1688. No close below the 15-minute rotation zone. Little spike down, going with the open. Remember, watch everything on the closing basis. Is this a double? Does not look like it. It's reversing too much of a move. So right now, as long as you're staying, especially on a 15-minute closing basis, above about 1686, 1688, it's still in short-term bullish mode. And then look at your longer term. You're into clear path, your next major topping area. And you could fine tune this with the lower, but that's going to be 1703. Then I'm going to go through my time frames, key topping area there. I'm also going to be watching for, if I could put them on the right way. Look at this. There's my 87.5. So this is my next major key area, 1703. And you look, you have key resistance there. So that's still for a continued upside play. That's my next major key area that you utilize from putting the targets together. Minor areas is 1695. Wow, really? Whew, that was pretty strong. Let me peek in at crude. Didn't we just put up this harmonic this morning? Learn to utilize the levels. Little pause there, spike up there. This is why for even the short term, I'm just showing this to not, again, advocate a crude trade. I'm showing you how you can utilize the harmonics to adjust or maintain stops or take profits throughout the day. Remember, your longer term harmonics are more important than your shorter term, but this is a pretty key low to high harmonics we put up in the pre-open. Pausing right at this 30 mark. So the VIX, in order to get in sustained bullish mode, and has to make another push down right now. My tick, again, there's been no breakdown move. I'm really going to pay attention to, you can even watch about minus 250. But no major selling pressure in the stocks yet. You have virtually no selling pressure in the stocks. It's freaky. It's like mathematical voodoo. All right. I've gone way. This has been a long morning. If you find this information useful, please do consider supporting the channel. Again, thank you for the super chat earlier. I appreciate everybody who contributes with the super chat. Let me highlight that from Sashi. Thank you very much, Sashi, if you're still here, for the super chat. Trying to show people, I've been requested to do this a lot. That's how you watch. Still, no selling pressure. Just a little blip. But look, it couldn't even get back below 0 on the selling pressure just yet. So this is just, what kind of correction is this so far? A sideways correction. Burning off your short-term overbought by so far moving sideways, without even negative tick coming in. Options on this very short term are very challenging, PMG. All right, wrapping this up for now. I shall talk to everyone later in the day, should my head not explode. We need to cut this video so I can post it for about 5 minutes before the open through the end. What do you cut this video? Well, contact me, Sterling. I'll talk to you more about that. With that, I'm wrapping it up. Everyone have a fantastic trading day. Bye.